Hi everybody, and welcome to the second part of the video that I posted yesterday. And after that video I received a lot of emails as usual, and instead of replying to everyone with some different questions, I will try to make a recap of all the things that probably I missed in my exposition in order to complete what I was saying with some practical examples. If you remember, I go straight to the point, so I suggest you to watch the previous video with the same title, and then you can see this as an addendum of what we are talking about. So if we remember, this is the chart, and this is the statement. We got a situation that has developed with some first trades, and you can always check in the previous video. Is exactly the same setup, the same statements. I got this first up with this very first trades at the beginning of the week, identifying in a way GBP as the weakest currency for the week, and also the month, because the month started right this week as well. Then we got this testing phase with some test of trades and really nice development at the end that led to this this amount of profit in the very week. Okay, with some trades injected in the day and taken the profit in the same day, and other trades that were since more days. One of the questions, let's go for a while. Okay, now I got some other trades. So if we see here, it has a little bit improved this curve with some other positive trades, this time on the Japanese yen that I was observing anyway, and it was quite there, and always the GBP USD. Let's go first on our MetaTrader as usual, and the questions that I got were about, of course, this new feature that I have implemented, and about the values that I was reading and that were indicative of taking a decision on what currency pairs I should have choose to trade. If we go on a weekly time frame, we see that now the setup and the values, we see that the Japanese yen, and it was already this morning, developed with the same strength of euro dollar plus 700, which is a very significant value. And at the same time, from minus 1200, the GBP now went to the minus 1600. So we have a very weak currency against two very strong. Therefore, these trades related with GBP in sell and USD and Japanese yen in buy. Okay, actually I will also close these trades to make, as usual, the final balance and statement. But as you may see, the GBP USD, I injected this order. Let's put a 50-minute time frame. So basically around 12 o'clock, 1400 in the afternoon here. Let's also make this way. Well, at the very beginning of the American session, the blue square. Okay, there was this big retracement that, of course, took out a lot of positions as sell, and I decided to enter my trade. And as you see, at 2:30 in the afternoon, as we can see here, around 2:30 in the afternoon, because it was reached at the same level of maximum of the European session. And at that point I decided to sell because of the conditions that we see in a weekly time frame of the GBP against the US dollar and the Japanese yen. So the movements that I have registered in my algorithm led me to make this extra movement, okay, for the GBP USD that now is getting retraced, and of course it's Friday, we're going towards the end of the markets. But one of the questions was, but what if I cannot trade during the week and I come on Friday? Okay, on Friday you have to be very careful, but there's still an opportunity if the setup is confirming these the values that now we're seeing the values here on a 50-minute time frame, so they can be different, but we see anyway that there is some strength and weakness, of also GBP and USD, therefore the retracement now here and the ranging phase. And but if we go on a weekly time frame, see, this is the weekly time frame, and also we can see it here. The situation is still persistent and with very huge values. So what was important to analyze first was that, and then inject the orders properly, so wait for the moment. In this case, this is a very good point for selling indeed, and now my algorithm is giving me this fair price that it's ranging, so it can be also that it's bumping even more up, but I am already in a situation that I know it's Friday, and this big move would have been, quite difficult to read without having the proper charting and the proper graphic representation, at least of the market hours. And for as regard the Japanese yen, at the very same hour, plus or minus this area, there was more ranging, of course, but also the GBP Japanese yen expressed the weakness, okay, of the GBP against the yen. So this is another example that you can also trade daily and taking profit daily. But what if I would have read this value, the values that we see as usual in the weekly time frame, or daily, sometimes weekly, but anyway the longer time frames. But what if this move would have been already performed? I would have not taken any trade, as we were in a ranging of oscillation around this area, and this time I decided to take a chance, and the result was quite positive even in this case. And it seems it's still creating a kind of situation of going down, and in a minute I have to go, so I will also close the trades. This is a demo account for purposes of explaining my theories, so it doesn't matter if I close the trades, but it's important for you to see the development in the statement. And of course I also used some time to take a chance to give more testing to this new feature of the support, resistance and fair price level. It's very critical that when we read the markets in the overall performance, we give a backward reading on the charts if the big movement has already occurred, because it will be registered in the market performance, or we are in a ranging phase. If we are in a ranging phase, it can be proper to place an order of sell or buy depending on the setup of the assets. If the movement has already occurred, we miss the opportunity, and then the trade becomes too much risky, or with not that much risk reward ratio. And if there would have been already this movement, I could have, make a kind of risky trade, but I would have not. If it was here, yes, I would have done it. So basically, this is a kind of standard behavior that you always have to do. Always check the targeted currencies that we have to trade, if they have already expressed the movement or not. This is crucial, because what if we are here and we read the values and we see that GBP yen is going to fall, but then we have this retracement? We can think that it has finished, or we are anyway in a situation where we are in a loss. We are hedging in loss for a long time, and we can be discouraged, or we can go into our margin call levels, and that is not very likely for us to happen. Okay, so always check before if a big movement has occurred or not. This is crucial. And other questions that I got about the reading is that why in the monthly, some of us were very clever and noticed that in the monthly and in the weekly the values are the same. Of course they are the same, because we are in the first week of the month, and as we are in the first week of the month, the values of the week and the month are the same. Next week we will have different values of the week and different values of the month, and that will make us do other assumptions about possible retracements or possible continuations, but it will be anyway a new trade, a new reading of everything, because in the middle we have 2 days of blackout. We have Saturday and Sunday where banks are closed and trades are off, but this doesn't mean that the situation, the economical situation, the big hands that are deciding what to do, they are analyzing what is going on, what are the positions taken, and what the currency pairs will do, and then they can reset everything in order to create confusion as usual. So it's very crucial every Monday not to start immediately to trade, but take a time to read the charts, let the market develop, let the market arrive to values, significant values that gives us an idea of strength and weakness, and then take action. We have to be patient, because the big hands expect us not to be patient and to start immediately to trade in order to get our profit. Okay, and instead we get a loss because we are too much, you are rushing too much, instead of waiting for a while for a better price level to hit. The overall performance at the end, let's say that now I'm closed and I'm closing also this 2 final trades, so I can also conclude this exposition, and as usual I create a final report this time. Okay, and we got at the end this profit on a base of 10,000. We got 6,000, and you can see the very last trades were all very successful and positive. I also traded a bit New Zealand dollar against the US dollar, strong New Zealand dollar weak, but New Zealand dollar, as we see, is not very important in weakness as the GBP. So between the two, I definitely would choose for the British pound. Japanese yen and US dollar, these are the values quite significant, starting from 350, 400, or minus 350, 400 in this case for the other. But New Zealand dollar was a good competitor, but not enough, because I have to choose every time the currencies that are moving in that moment. And in this case, I realized only a day trading situation. Okay, of course, now maybe it would go even more. I don't care, I got enough. This is the way also you have to think. We always do expect to do more and more, but at a certain moment it becomes very risky, because those who are willing to enter the market and create a kind of confusion, they can do that at every moment. And paradoxically, it's always the moment, it's always the time, it's always when you go there. It seems impossible, but it is. So being having a safe behavior and some strict rules that no matter what we apply is the very first approach to the risk containment. Okay, and also I think that this new feature that I have improved is starting to reveal a kind of good indication, because as you see again, this is the actual fair price of this instrument. Let me just put it a bit more in evidence. And this is the ranging, so this level and this level, that the pair has to deal with in terms of buyers, in terms, sorry, of sellers along this line, and buyers. Okay, of course, I've been requested about this. Why did I say that it doesn't change? In real, it changes, but every half an hour. So there is a little formula in the algorithm that every half an hour calculates the fair price first, then calculates the support resistance level that are described by the movement of the currency pair, and then of course creates this graphical aids for us to have a better idea that normally can be used, not all the time, but can be used with the volumes. So if we see volumes when the price is above here, is an indication big volumes. If we see that there is no volume, probably that the price will go even up and even more. But we know that volumes in Forex are tick volumes, are not real volumes. But somehow they express an activity, and this is somehow anyway an information that we can keep in our for our decisions. Okay, I think that majority of the questions were regard this these topics for as regard my previous exposition. Other questions, as usual, is how to have this algorithm. This algorithm is something that I do with the mentoring I provide. It depends on the cases, it's not for everyone, and is for manual trading. That's why I'm mtalgosolutions. MT doesn't stand for MetaTrader, stands for manual trading algo solutions. Algorithms is not only something that trades automatically. In that case, is an auto robot, so auto trader. An algorithm is also something that makes computations. Then the execution comes from our analysis. So it's specifically designed for manual trading rather than auto trading. So if you are interested in something that it's automated, it will come in time, but for me still the manual trading remains the better way to handle your decisions. With a robot, you don't know you don't have all the control that you can have with manual trading. Even accepting some losses, it's good to have the major of your positions in positive, but you can also make some attempts or some outlooks, even if the values are not quite confirmed. But if you have control, you can also accept to close the trades instead of putting, a stop loss, and be there and do the job. But this way you can also have an idea of the markets, how are going. You don't give too much information to your broker. Think that the moment you have an auto robot, you must give like take profit and stop loss level. And for me this is quite significant, because every information that you provide to your broker, the broker has to take it, because when you have a take profit or a stop loss, the broker must execute that. So the broker must register that information on his servers, and this means that the broker holds that information and can use that information against us. It's quite clear. If you have more information, you can better handle and take advantage from that. So the less information you give to the broker, the better it is. I hope this exposition provided also answers to the questions that I received, and this is the final answer that I can provide you. And as usual, have a good time, have a good space, and have a good weekend. Recharge, reload, and get better the next week. Okay? Have a nice time. Bye.